How's it going, guys? Luke here from LAGFX, back with another Sunday Sessions video. If you are new to this channel and you don't know what these types of videos are, it is basically where me and James go to the markets, do our analysis, and give you our rundowns and our breakdowns on what we believe is going to happen in the coming week. These are great ways to learn exactly how we trade, but on top of that, you also get the opportunity to have potential trades throughout the week from the analysis we have done. And what you can also do is use our analysis as added confluence for your own analysis. So the first pair that I'm going to be looking at today is the Euro CAD. This is a pair that we have been capitalizing on throughout the past 2 weeks, and I am really looking to capitalize on it this coming week. We have just seen some displacement, breaks of structure to the downside, and I am looking to capitalize on that swing. So as we can see, this is on the higher time frame, so this is on the 4-hour time frame. We can see how price is quite obviously bearish. We have had plenty of breaks in structure, and we have had clear bearish structure throughout. If we zoom out a little bit here, we can see the break of structure that really confirmed this bearishness moving forward. That's where we looked at capitalizing on these trades here. Zooming back in slightly, we can see how this is the swing high, this is the swing low. Now price hasn't tapped back into this area since creating this low, and I'm really looking for price to tap into this area before it goes on to either take a move up or continues to take a move down. So looking now at the 1-hour time frame, we can see a bit more of a clearer picture of the current state in this pair. As you can see here, this is the swing low. And now we can see how price has basically been retesting. Now, I would consider this the retest. It has then set a high. It's come down to set a low. And I would say it's still ranging within a price because it's still failed to break this low. Now, this high has not been broken since, which is great. So this, we could say, was a protected high. Price has come down, failed to break it. That's great. This confirms bearishness still. Now, I believe price could continue to come up slightly, as we can see from this path. Come back up slightly, I would say, from this area here. These are the last buys before the sells. I'd like to see price come back up, tap into this area, and then go on to tap into our last sell before the heavy buy. Now, when it comes to tackling this market, how would we go about doing so? Well, what we could do is actually go down to the lower time frames like so. Keep an eye on the structure of the market and look for breaks in structure on the fractal time frames. Now, I believe, as I said, we'll see price trail up, come into this area, tap into this area, and then I'd like to see some kind of displacement, break in structure here. Once we have that, and we have what looks to be a bearish move down, that is when I'll be looking to take advantage of my short position. So we would keep our stop loss as minimal as possible, keeping it above a structural high, and then having our take profit set somewhere within this area. Now, before we look to capitalize on a short position, we could in fact go again down time frames. Look for breaks in structure, so something that is shouting out bullishness up into this area. Once we have that, we could enter in on our position. So this could be a break in structure here. This was a lower high that was set. This lower high has now been broken above. This tells me that price is displaced and price looks to be moving higher. So we could set a pending order somewhere up here once we have that right confirmation. Have our stop loss below these lows, and then we could ride our position up into this area. So we could in fact capitalize on 2 positions within this one pair and following the pattern that it's putting in place. Again, just looking at this pair now on the 1 minute time frame, just to show you guys how we could capitalize on the buy before sell. This low here has failed to be broken. This tells me that price is potentially moving bullish. So that's our first piece of confluence. We have then had this low here. Price has broken above it. And now a more structural lower high has been broken, as we can see evidently here from this wick. Price has broken above this. So this is our displacement, this is our break of structure. So now what we could do is we could wait for further confirmation that price is continuing in bullish structure. And then as soon as we have that, we could jump on our position and then we could really refine our stop loss. We could set it below this structural low if this is or goes on to be a structural low. And then we could obviously have our take profit up there. Or if price wants to retest slightly before then taking its swing up, we could look to get in at the start of that impulse. So what I'm going to do is I'm actually going to set an alert up here, wait for that to ping, and as soon as we have the right confirmation, I'll be jumping on. And then what I'll also be doing is setting an alert up here for when price taps into this area so we can look to capitalize on that sell. Now, that is my analysis for this pair, quite simply. I am biased to sell into this pair. I do believe that the structure of this pair is bearish. I'm wanting to capitalize on a bear. We want to trade with the trend and not against it. But if we wanted to really maximize those profits and take full advantage of the structure of the market, we could look at buying before the initial sell. Now moving over to the USD CAD pair. Looking here on the 1 hour time frame, we can see how price has displaced. It has broken this bullish structure. Again, confirming bearishness. Price did come down and now we have this area. So this was the last higher time frame swing low. Price has failed to actually break below this, which tells me that price could in fact start to move higher again, or alternatively it could just be retesting before it goes on to take its next push down. Hence why I've had these two paths drawn out here. It will be interesting to see how this plays out. Now, depending on how it does play out, if we see price break above this high here that I've got set, I'll be looking for those buy positions. If we get a break below this low here, I'll be looking for those sell positions after the pullback and retest has taken place. And I'll be riding it down to this line here as this marks a higher time frame structural low. That analysis is quite brief, but I think it's a matter of just if and when and looking out for what actually happens. There is no clear direction as of yet. The overall structure of this market is bearish, so we do realistically want to be looking for those sell positions and trying to capitalize on a sell position, but price could actually start to trail back up as it hasn't displaced this low here yet. Now, the last pair that I'm looking at today is XAU to USD. I haven't actually traded this market in a while. This is one of my favorite pairs to actually trade, but just with current fundamentals and just the way the world is going at the moment, gold has been, let's say, a little bit unpredictable. Now, this is because it is considered a safe haven. So when there is doubt and fear in currencies, especially your base and your major currencies like the US dollar, the Great British Pound and the Euro, people will pull their money out of said stocks and shares and put them into precious metals and other things that hold, some kind of value. So with that being said, price has been very jittery up and down, but I believe that things are starting to calm down in the world, and we should see gold act somewhat more predictably, and hopefully we can capitalize on some positions on this pair this week. Now, I've marked out two lines here. I've marked out the extreme high that was set back in August of 2020, and I've marked out this low or an extreme low within this region. Now, price has failed to break neither the high or the low. It's actually ranged within this. If we zoom in slightly here, we can see how price didn't actually tap nor break that high, which tells me that it's not wanting to break higher. We have then go into the 4 hour. We have then seen displacement take place. So breaks in structure. As we can see here, price trailed up in a bullish manner. It has come down, tapped into this low, and then gone on to break it. So that was our first piece of confluence that price could be looking to move lower. Now on top of that, we move to another structural low, which was here. That has also been broken. We can see prices has broken that low there. Now I believe this is a retest. What I would be looking to do is wait for extra confirmation. So wait for price to actually break this low once again. Once we have that, and we'll then be looking for the retest. After the retest, looking to jump in on the start of its impulse, as we want to capitalize on a full swing and not jump in, you know, whilst the swing is in play. If we zoom in and we go down time frames, maybe looking at the 15-minute, we can see here how price was retesting, bullish structure, lovely. It's set a higher low here. That's been displaced, so we could have actually jumped on here, for example. Price has come down, broken the low, it's trailed back, it's retested. We could have waited for displacement on the retest. So here, that once those lows have been broken, that would be our confirmation to jump in, as price has then confirmed to us that it is now moving bearish. The retest has finished and is looking to take its next swing down. We could have rode this to this point here, as this was a structural point for the higher time frames. And as we could see, the trade would have been well on its way. So we would have had a take profit of 1914 with an entry of 1936. That gives us a 220 pip take profit and a stop loss of 1941. That gives us a stop loss of 50 pips. So it would have given us a lovely return of a 1 to 4. It's literally that simple when it comes to placing positions on breaks of structure. Obviously, you would look at higher time frames and you want to get extra pieces of confluence and confirmation, but it is quite simply that easy. But yeah, just to get back to the analysis, I am wanting to see price come down, maybe displace this, come back up, set a lower high, and then we'll jump on and try and ride it down to another structural point within this bullish impulse. Now, I hope you guys have enjoyed my analysis. It has been quite brief. Previous Sunday sessions, I would go into greater detail. I would maybe analyze less pairs, but I would go into greater detail, showing you exactly where I'll be looking to enter, you know, giving you extra parameters that you can use to then go and trade for yourself. I thought this time I would just analyze a few pairs, give you my bias, and show you some key points and facts at why I'm looking to place the positions I'm looking to place. And then you can go off on your own and you can analyze the pairs yourself, set those same alerts that I've done, and wait for price to play out. Now, what I'm going to do is pass you over to James. James is going to run over some of his analysis, run over some of the pairs that he is looking to capitalize on this week. Now, if you do enjoy the video, please don't forget to leave it a like. Every bit of support is much appreciated. If you have any feedback, leave it in the comments below. And if you haven't subscribed already, be sure to do that so you don't miss out on any videos that we place in the future. Now, this week is a Learn to Trade week, so I will be posting a Learn to Trade video on Wednesday, so be sure to check that out, as that video is actually a video I sent over to the clients in the Learning Lounge, and I go over structural lows and highs and breaks in structure, and I also talk about fractal points and fractal structure as well to help my clients gain a better understanding of structure within the market. So if you are a bit unsure about some of the things that I've gone through today, that Learn to Trade video that's coming out on Wednesday will be perfect for you. Put the notification bell on, or be sure to come back to the channel on Wednesday, as that video will be up and live, and that will help you for future reference and will help you understand structural laws and structure within the Forex markets. Now, without further ado, I'm going to pass you over to our head analyst, James, and I hope you enjoy what he's got to say.
Hey everybody, hope you are all doing well. Thank you, Luke, for your analysis. I hope all of you enjoyed watching through. Now I'm going to go over to me. So I'm going to start off onto the XAU to USD, so the gold market. Now, I'm not going to do a full top down here. I'm not going to waste time. I'm going to try and keep it short and sweet. So we see here one impulsive wave. So that is my blue box. We've had this bullish impulsive wave upwards, and then prices began to retrace back down, building a correctional wave. I was looking somewhere in this region for a demand zone, so the last sell to buy. Now, I did refine it just to this zone here, although it was arguably this entire down move here. Now, you'll see that price tapped an alert that I had set around this region, and from here I have identified what I believed is an accumulation. So we've seen that around about here, we're getting that preliminary support. Demand is beginning to be introduced into the market. Supply is diminishing. Now we have this buildup of liquidity. You'll see that I did try to enter in on a position here, as I thought that the mitigation here was actually the spring or the shakeout, so to say, evident by a large down move before an up move, sorry. And then I saw this break of structure. So I thought, okay, this is an impulsive wave upwards. We'll see price, as you see it tapped into this demand zone, which I had drawn out, and then it started to make a move up, and I wanted to try and profit on this. As you see though, price ended up falling through, clearing all liquidity within this region here, and this pretty much just has a purpose of creating what is now the spring. Even though I thought we had already created it, we've put it in place now. So after this has happened, price trades up. Obviously, as soon as we have manipulated the trading range, as soon as the spring has been created, that is where the smart money operators are executing their large buy position. So straight after it's done, we see high volume, high spread candles pushing the market up, displacing this entire area. So we know from now, bullishness should definitely be confirmed. This should be a protected low. And I've identified again a demand zone in this region. You can see that we've had a distribution up here, and since then price has begun to trade us down. Now my expectation is that price will continue to do so, keep putting in bearish structure until hopefully it mitigates this position, accumulates again on a lower time frame, and then we can look to ride price all the way up for the next impulsive wave, which could potentially take us to the final target at 2070. So from this region we could be looking at, that's 1906 all the way up to here. So we're looking at a ridiculous amount. I think it's about 1,600 pips. So if we are able to get involved, if we are correct with this story, with this bias, we could have a great opportunity coming. Okay, so now looking on over to the euro to the USD market, you'll see that pretty much what I've been expecting is for price to slowly trade all the way back up to mitigate some of these positions higher. After a very heavy drop, after a big bleed out on this market, I do believe there's going to be a lot of market inefficiencies, a lot of positions that need mitigating. So an up move now does make sense. Obviously within this region we can see we've had impulsive wave higher, correctional wave, impulsive wave, and then what we can do is, if I update the analysis here, you can see that we can take this entire up move as an impulsive wave. So that is our blue box. We can then look inside of this region, or where is unmitigated to me, that is pretty much this entire down move here. So we've got this alert, we'll set that here, wait to see if price taps us in. If so, go to the lower time frames, hope to see an accumulation, a displacement, and then try and trade price all the way up, taking a partial at the structural high here, or any structural highs that we may see in fractal structure, and then having that stop loss just below. That would be how I would look to execute. Although it's a broad prediction, we have to see how price plays as it happens. Just some further background check on why I am even thinking this in the first place. So this is an impulsive wave down. Now all I'm seeing this as, or this bullishness here, is a correctional wave that does need to get put in place in order to mitigate, in my eyes, either this region here or the region up here where we see a large buy position. Now this large buy definitely had the purpose of clearing liquidity. As we see, it's definitely been smart money control due to the volume of this push through. Now what we can expect is that if price does trade through here and we do end up having a lot of demand in the market, we could then expect price to trade us all the way up to here, wanting to mitigate this. So here on the oil market, obviously this has been very volatile with everything that's going on economically. Now this is very, very similar to what the gold chart looked like. You can see that price traded us down into the last sell to buy. We can see an accumulation has formed with all valid events, all valid phases, and pretty much what I'm going to expect is I want to try and find ways that we can get involved on buy positions to hopefully trade price up with its next impulsive wave. So when we go to a higher time frame, this region seems to be a last sell before buy. However, as price continues to trade, we will update the analysis. If now, because you can see that this low here should arguably have been a protected low. Now, the fact that price has blown through that, this could be an early sign of a displacement. Now, what that means is that it's an early signal that the market could be ready to reverse. So if we see price here now reversing, because this is arguably our last buy to sell. So if we see now that price is tapped in, a distribution on the lower time frames, a reversal, and we see price begin to trade down, that could be confirmation that a correctional wave is being put in the market. If so, we can try and watch, see where price trades is down to, hopefully then find a region that needs mitigating like this demand zone, try and find entry confirmation within the zone, and then get involved with the next impulsive wave higher. So if we just go down to 1 minute in this region, we might be able to have a look, see what's going on. This is quite hard to view, so to put it simply, I'm going to set an alert right here at 104.26, and if this low is broken, that will be a lower time frame displacement. If so, let's imagine we see price trade as down, we get that displacement, we then look inside of this region and say, okay, well, this is our last buy to sell, and potentially then see price come back up, mitigate, and then take that move lower into the mitigation of the demand zone that we were just looking at. Now, to anyone who is unfamiliar with Wyckoff, now obviously as I looked at the XAU or the gold market and also coming over onto the oil market now, and I've referenced an accumulation in both, and if you're unaware of or uneducated on Wyckoff and Wyckoff schematics, you're just going to be looking at this region and have absolutely no idea what it means or what relevance it has. Now, I am telling you that the understanding of Wyckoff, the composite man, Wyckoff schematics, it is an honest game changer within how you view the markets and how you look to trade. Now, whenever a market reverses, we have to undergo a Wyckoff schematic, because a Wyckoff schematic is either marking the end of a downtrend and a reversal, or marking the end of an uptrend and a reversal. Now, they're typically always notable by manipulation, because as we see here, what we've had to do is we've had a large move down. Now, supply is in control. And as we get to this point, what the composite man is having to do is absorb all of that supply, because we've now reached, as we see in this box, our target. So the composite man does not want price to trade any lower than this zone in order to keep profiting from his buy position. So what that means is that as price enters, the composite man is having to open and close positions, undergo this process in order to absorb all that supply. And then as we see, as the trading range goes on, once that's been done, this manipulation, or the spring, is the region where the composite man executes the buy position in order to then shift the trend. So we'll see that straight after a spring, typically, that is when price just takes off, as it has done so here and in the gold market. So educate yourself on Wyckoff. Within my Beating the Bank course, which is now live on the LAGFX website, I have an entire PDF running over everything there is to know about Wyckoff. That is the third PDF within the course. On top of that, the mentorship program is coming soon, which will dive in depth as well. And I will give you those one-on-one sessions to ensure that you become competent at understanding Wyckoff. Regardless, thank you guys for watching this video. I appreciate you taking the time to watch me and Luke go through the markets, looking at our bias in order to stay up to date with the analysis and with the potential entry points we're looking at. Make sure to get yourself in the learning lounge, because we post regular updates there. With that being said, make sure you like, comment and subscribe, and we will see you next week in Sunday sessions.